Hey everybody, Dave here, Hidden Freedom Investing. In today's video, we're going to go over my dividend portfolio, judging by some of the comments and judging by where people are pausing in some of my dividend portfolio videos. It's coming to the conclusion that people want to see the positions in my portfolio, even though I kind of show them in the video. I just don't pause on it or anything like that. So today's video, we're going to go through all my positions in my dividend portfolio. So let's go ahead and get started. The information expressed in this video is my opinion and my opinion only. This information is for entertainment purposes only. Please do your own research. Alright, we're looking at the overview page here, and I've showed this in many videos in basically my monthly update video that I do. But this week was a disastrous week for the dividend portfolio. There's a lot of sector rotation or something like that going on this week, where the NASDAQ pretty much took a dump over 5 or 6% the whole week, but the dividend portfolio held up. But there was still a couple of days there where the dividend portfolio did not hold up, and today was one of those days. Today is Friday, February 26th, last trading day of the month, but the portfolio took over $5,400 hit today alone. So I mean, it is what it is. We still get paid our $1,400 in dividends a month, regardless whether our portfolio value drops. So let's go ahead and actually look at the positions. So we're looking at the positions here, and I do have these sorted from least to greatest. So as far as portfolio value is concerned, or maybe the allocation, let's call it the allocation, from the least allocation to the most allocation, that is how these are sorted. So the smallest position we do have in here is Home Depot there. That's 14 shares, and this is basically two portfolios combined here, this view right here. And here is the two different accounts. I got a taxable and a non-taxable. 2 shares in the non-taxable and then 12 shares in the taxable account. So going forward, I'm not going to just show the positions for the taxable versus tax deferred. I'll just kind of show you the overview portfolio combined, because just make it a little bit easier there. So right now, Home Depot is the smallest position there, 14 shares total, and I got a cost basis of 192, so I'm up 34% in that position. And my yield on cost on that position is 3.12%. The next position up is APD, which I know has had a sell-off the last few weeks or so, but I'm still up 13% in that particular position. 16 shares total for a cost basis of 225, and my yield on cost in that position is 2.66. The next position in here is Coca-Cola, and that's consumer staples. I got 101 shares total. My cost basis is 46, and I'm up 6% in that position. And I think my yield on cost is 3.55% on that position right now. And that brings us to the next position here, Verizon. I got 90 shares total of Verizon, and my cost basis is 53.71. I'm up about 3% roughly, and my yield on cost on Verizon is 4.67%. That brings us to our first energy play here of Chevron. 51 shares total of Chevron, and my cost basis is 91. I'm up roughly about 10% in that position at this time, and my yield on cost on Chevron is 5.66%. The next position will be Starbucks, Starbucks had an amazing day today, up 4.4% just today alone, and roughly about 48 shares total there, and cost basis is 75.51. I'm up 43% in Starbucks, so people are going back out and drinking that coffee, obviously, and my yield on cost on Starbucks is 2.38%. Next position is Pfizer here. I don't know what's going on with Pfizer lately. Maybe the vaccine news has just been played out to death. I don't really know, but I got 158 shares total, and my cost basis is 34.59. I'm down 3% in that position alone, and the yield on cost on Pfizer is 4.51%. That brings us to the next position here, Con Ed, which has been selling off a lot lately. I don't know what's going on with that position. I haven't really dug into it much. They are a, what are they, Dividend King? No, they're the aristocrat. So they're aristocrats, so they're in the portfolio. I got 84 shares total, and my cost basis is 75.37. I'm down 12% in that position right now. Like I said, it's been selling off a lot the last month or so. And my yield on cost on Con Ed is 4.11. That brings us to the next position here, Altria Group. And I got 138 shares total of Altria Group there. Had sold off a little bit today, but my average cost is about roughly about 41, so it's 40.99, up 6% in that position. And the yield on cost on Altria is 8.39, so that's a pretty good yield on cost. I bought it, been buying out throughout 2020, I think, so I got a good yield on cost in that. Next position here is AbbVie, and AbbVie, obviously they've done pretty good. Got a good cost basis on AbbVie here. Got 58 shares, roughly about 57.85 shares, and my average cost basis is about 78. I'm up 37, almost 38% in that position alone, and my yield on cost on AbbVie is 6.65%. And that brings us to our next utility here, Southern Company, and I got 116 shares, almost 117 shares of Southern. And I got a cost basis of 55, and I'm up about 2.7% on that position. And my yield on cost on Southern is 4.64%. That brings us to our next energy play here, ExxonMobil. I've done many videos on ExxonMobil. If you want to look at my latest ExxonMobil video, you can look it up here. I basically made a bull case for it, and I was right. The stock has come up quite a bit. I've rendered a little bit of profits in it and kind of reduced my energy play just a little bit, but right now I do have 125 shares of ExxonMobil. I had a down day today, but my cost basis is 51, and I'm up about 4.9% in that stock alone. And my cost basis, my yield on cost is 6.71%. That brings us to Colgate-Palmolive there, a good consumer staples defensive play there. I got 93 shares total, and I had a good sell-off today as well. My cost basis is 71.42. I'm up 5.3% in that stock, and my yield on cost is 2.46%. Good old Caterpillar here has had an amazing year. I guess it's the industrial play of the century here. But so I do have 34 shares. I have rendered a little bit of profits in that stock alone, but it had a down day today. Despite that, my cost basis of 109. I'm up 98% in that stock alone. So I did render a little bit of profits in that stock. My yield on cost on Caterpillar is 3.78%, which is amazing considering the annual yield right now is 1.9% on that stock. The next stock in my dividend portfolio is Duke Energy, and that's the third utility in my dividend portfolio. I got 90 shares roughly total, and I got it at a cost basis of 83.58, and I'm up about 2.4%. I've rendered a little bit of profits in that as well. But my yield on cost on that stock is 4.62%. The next position in my dividend portfolio is Realty Income. That is the only REIT I own, and it's one of the best REITs in my opinion. It's debatable. Some people might say FRT, or maybe even people put Simon Property Group in that category, Stag or something like that in that category. I really don't know. But this is a dividend aristocrat. There's not many. I think FRT, Federal Realty Trust, is a king if I'm not mistaken, but I don't really like what they're invested in. So Realty Income is really one of the only ones that I like what they're invested in, and I believe in those companies. So I do have 146 shares total, and I have a cost basis of 60 roughly. I'm basically flat across the two accounts in Realty Income, but that's fine. I get paid a monthly dividend with Realty Income, And most of those shares are in my tax deferred account, by the way. So here's tax deferred over here. I got 141 shares over here. In the taxable account, I have 5 shares. And the only reason it's like that is because those are not a qualified dividends. So I want to put those in the tax deferred account if I can. So that's what I've done. So the yield on cost on realty income is 4.67% at this time, which I said is flat. So that is the actual current yield at this time as well. Scrolling on down here, we got Procter & Gamble here, which is an amazing defensive play there. So it's another consumer staple. I got 78 shares total, and it looks like I had a pretty bad day today. I got cost basis of 119. I'm up 3.5% in that stock alone, and my yield on cost on that stock is 2.65%. That brings us to Pepsi here, which obviously is higher in my portfolio than Coca-Cola is. It's just, I believe in Pepsi more than Coca-Cola, even though, you know, Coca-Cola has had longer track record and all that. I just like Pepsi's chip play and their snack play. So I put more weighting towards Pepsi in my, in my portfolio. I do have 76 shares roughly. I got it at an average cost of cost basis of 131. I'm down 1.65% in that stock alone, and my yield on cost on that stock is 3.11% at this time, which is actually lower than the current yield. That brings us to the ass gasket maker here, Kimberly-Clark, which they've kind of suffered a little bit, probably because nobody's using the ass gaskets at the airports. A lot of people just aren't flying, but it is what it is. It's really sold off. It's actually near the 52-week lows at this point. I do own a PMCC, a poor man's covered call on that stock in my options account, but I have 77 shares of that stock right now. It is a defensive play. My average cost basis of 137. I'm down to 6.4% in that stock right now, and my yield on cost is 3.33% at this time. That brings us to McDonald's here, and that's another consumer discretionary in my dividend portfolio. I'm not going to deny that it's cheap food and it's pretty much junk food. I mean, it's fast junk food, but it is cheap and a lot of people shop there. I haven't had McDonald's in months. I think probably years at this point. It's probably been years since I had McDonald's. They do have good tasty fries. I think Jack in the Box wins out, but it is what it is. I do have 50 shares of McDonald's, and I have a cost basis of 185. I'm up almost 11% in that stock. And my yield on cost on McDonald's is 2.78% at this time. That brings us down to AT&T, which is kind of interesting because AT&T has had some news this week. That is the second consumer, I guess my communication services sector stock other than just Verizon. I don't own any Disney anymore. I used to, but I got 378 shares of AT&T. I got a cost basis of 31.3, and I'm down almost 11% in AT&T alone at this point. And my yield on cost on AT&T is 6.64%, which is significantly lower than what the current yield is, 7.46%. So they did talk about spinning off that DirecTV there. I don't know why the stock sold off from that. Probably because they lost literally half the amount of money they invested in that. But it is what it is. They'll get that back, what I think it was $8 billion or something. They can put that towards their debt. And maybe eventually once they get that debt start to be a reasonable level, that will come back up. Meanwhile, I think it's still a great deal. At 27.89, I do have some poor man's covered calls on AT&T, 15 contracts on that. It pays a pretty good penny there, about $1,000 a month just for a poor man's covered call. But I also collect $786 in this portfolio in dividends, so I'm not complaining about that. It's just giving us another opportunity to buy more at this point, right? Yeah, it brings us to 3M here, and 3M has been doing pretty good because it is industrial play as well. I got 63 shares total there. My cost basis is 154. I'm up 13% in 3M, and my yield on cost on 3M is 3.8% there. That brings us to Apple here, and that is that's my first information technology stock in the portfolio at this time. 104 shares total, and I picked that stock up right at the March 2020 lows, like just perfectly. And my cost basis is 60. I'm up 100%, roughly about 100% in Apple alone. My yield on cost at this point on Apple is 1.35%, which is significantly, it's basically up double what the annual yield is of 0.68 at this time. So, I mean, even though 1.35% is not anything to shake a stick at, but it's still double what it is at this time. I believe they announced a dividend increase or something. I haven't really looked. See if they raise the dividend, but it'll probably be more than at least 10 to 15% is what my guess is, but we'll see. That brings us to JP Morgan here. In JP Morgan, I got 95 shares total. I've pretty much been buying that through 2020 alone. I got a cost basis of 98. I'm up 50% in JP Morgan alone. I did render some profits recently out of that stock, but my yield on cost on that stock is 3.65% at this time, and that's the only bank stock or financial stock I have left. I did have Wells Fargo, I cut them out. I did have Goldman Sachs, and I cut them out earlier this year or maybe part of last year. So that brings us to Johnson & Johnson there, one of my best favorite stocks in here. And honestly, I could cut a lot of stocks out of my dividend portfolio, but Johnson & Johnson is just one I'd own probably the rest of my life. And I got 125 shares total there. Had a pretty bad day, but it is what it is. And my cost basis is 140 at this time. And I got an unrealized gain or loss of 12.46%. And the yield on cost on a Johnson & Johnson at this point, this time is 2.87%. So I mean, that's still reasonable, especially for a stock of that caliber. It is a healthcare stock, but it's more than just a healthcare stock in my opinion. It's kind of more of like a consumer staples as well. That's how I kind of view them. That's why it's the ultimate stock to have in your portfolio in my opinion. That's why I weight it where I weight it. That brings us to Microsoft here, and that is the last stock or common stock or individual stock that I own my dividend portfolio. Information technology there, 103 shares of Microsoft at this time. Did have a good day. The NASDAQ hit a good day today actually. I have a cost basis of 186. I'm up 24% in Microsoft. I did render a little bit of profits in some of these stocks recently, but at this time my yield on cost is 1.2%. Nothing to shake a stick at, like I said, but we don't really buy Microsoft for yield. It is what it is, but I do get paid $232 out of that, but I can also sell covered calls against it as well. I do have 100 shares in this account. I have been selling covered calls against Apple and Microsoft and JP Morgan, although I did trim a little bit of JP Morgan recently. But that's okay because it all went into the next stock here, which is NUSI. So last week's video was on NUSI. If you want to take a look at that up here, NUSI is where a lot of these profits went to. Just running a little profit out of there. Didn't want to double dip and triple dip in some cases here because VYM carried some of these stocks along with NUSI. And I had them individually in my dividend portfolio, so I just didn't want to triple dip and double dip. So I rendered a little bit of profits out and then put some of those profits into NUSI here. I got basically about 3,000 shares of NUSI at this time. Okay, and I got a cost basis of about $28 a share. I'm down a little bit in that stock, that's fine. It does pay an annual income of about $6,300 at this time. And my yield on cost roughly on NUSI is about 7.56%. And the last position in my dividend portfolio is VYM, which I've done many videos on. If you take a look at that video, you can look up here. And VYM is the largest position in my dividend portfolio, and I'll talk about a little bit about here in a second. I do have about 1,093 shares. That's down from 1,400 shares I had earlier this month, and had a little bit of a down day today. But my cost basis is 82.84. I'm up roughly about 15% in VYM alone. And I think my yield on cost, let's see what my yield on cost on VYM is, 3.61%. So that's not bad, it's reasonable. Considering where it pays right now, 3.14. But I did render some profits out of VYM recently, about 400 shares of VYM, and that all went into NUSI, and I did a video on that, but I even rendered a little bit more out of it because I felt like I wanted to get a little more exposure to the NASDAQ as well. So I put some of those profits, because I was up pretty substantially in Vanguard VYM, I put some of those profits into NUSI. So just this week alone, I did render a little bit of profits out of the Vanguard VYM, because Vanguard VYM was actually up several days this week, and NUSI was down because the NASDAQ was down. So NUSI might have been down 1.5% or something like that, and Vanguard VYM was either flat or even up 1% or something like that. So I took some more profit out of the VYM and shoveled those into NUSI, and I think that's a smart play. Try to even those out a little bit there, get more exposure to the tech industry. I'll get paid a pretty good yield, and I also have downside protection. NUSI honestly held up very well just this week alone. Even though the NASDAQ was down 6% or something like that this week, I think today brought it up a little bit, but NUSI actually held its own and wasn't down quite that much, which is quite surprising. Even though it has downside protection, I didn't think it would really kick in until it got down more than 10%. Although we kind of looked at their holdings, it looked like they were only, it looks like they're accounting for about a 4.5% move down. So maybe they played it perfectly, and that's the only reason why I went down 4% compared to the NASDAQ. But it is what it is. Happy to have it in the portfolio. Glad to render a little bit of profits out of VYM and not triple dip as much in some of these stocks. Going forward, I don't know, some of these stocks may be in the chopping block. I really don't know. But we'll talk about that in the dividend portfolio update video for next, I think it's gonna be next week, and that'll be all my dividends received, the buys and sells and all that stuff for the month of February. So that's it for this video. If you have any comments, questions, or concerns, go leave a comment below. Hit me up on Instagram, Twitter, or shoot me an email if you want on anything that I've talked about in this video. Hope everybody has a great weekend. Until next time, go ahead and like and subscribe. We'll see you next video. Thanks for watching.